Happy Tuesday to you. It's the 7th of November. Joe with you here. Let's jump into a market roundup. I've got my 2 cents. Let's take a look at what these markets did and share with the community. Take responsibility for the outcome. You guys know the drill. As always, let's break down some meaningful news of the day. If there's anything out there that continued to move these markets up or change their directions to the downside, vice versa. We'll break it down technically and give our outlook when it comes to what we expect moving forward. And as always, we like to share trade setups.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into the market analysis, we hesitated once again at an expected level. This is pretty much what you'd expect after what the markets did last week, but unfortunately, there's not much we can do. Let's jump into the daily news here. The markets hesitate at a resistance levels, parking above 50 MAs. It was an absolute measured move, an aggressive move, but absolutely hesitated right at resistance levels. We'll get to the technical part here. There was a huge influx into the markets last week, and it all happened at once. So now you got this big influx back up to these resistance levels, and you're left with, well, where do we go from here? And we've been talking about this over the last few weeks, or at least a few trading sessions, because this is a tough one to gauge on how far this is going to go. If there's more bearishness coming, or if this is indeed the bottom, and hey, we should be buying into it. It really is based on sentiment, and I'll get right to it. So how do we finish? Well, the Dow, the S&P, and the NASDAQ hesitated one more day. The Q's chart looks a little bit more aggressive. You can see it was about 1% to the upside there. And the Russell down about 0.35, but not a lot of movement up at those resistance levels. This is the second day in a row we've seen a little bit of hesitation, as would to be expected. However, energy falling apart. Oil slid a little further. We've seen a pullback in the rates as of late, and that would be as expected since we did hit about 5% on that 10-year, which is pretty aggressive. So was a correction due? The answer is absolutely. Oil dropping 4%, down $77 a barrel, I believe, 77.5. That just shows that there is weaker demand or expectations of that in the future. Also, though, it did come off of highs. So this is a very difficult market to gauge anything past that. We've been so extended to one area that we're going to have that rubber band snap back. And now we're just overextended to the other area. And what do I mean by that? Well, let's take a look at this advanced decline line. Flat. Take a look at that. 49%, 46%. Corey made mention of this, of the 50 and below the 50 and above the 50-day moving average. This thing was about 80-20 at the end of 2 weeks ago, before that big surge, and we're about 50-50. So that was either the biggest short covering rally I've seen or an absolute guess of that is the bottom. There's some seasonality we'll talk about here in a second as well. So let's just jump right into the nitty-gritty here and get to the charts, because that's what I want to focus on. And as you'd expect, folks, we absolutely came right back up and landed at this resistance area. What I love about this chart, it kind of drew the line for us, but let's go ahead and just add to it. So we've got this area. Let me draw it a little thicker of resistance. We do have a decreasing volume, which you'd expect after overextension. So there's not a lot behind this to continue it higher, except for the fact that anything that was squeezed short is probably too afraid to get back in. And that's kind of the caveat that we're caught at. This has really shook the bears up. But it also created a, oh my gosh, I missed the bottom from the bulls. The two of those combined equals exactly what we've seen here, with this just massive move and a huge, just look at the gap. It's almost a panic to get in or out of the market all at once at the same time. Now what ends up happening is, when you build something this shaky, it usually doesn't last. So what are we left with? Well, it's kind of tough, because we're just left with what we have to go off of. We still have to gauge this, that is actually moving lower. Let me draw this a little bit more fair, because I want to make sure that you know that we did get above that resistance area. We are above that 50, but once again, we could get head fakes and have a 2 or 3 days above the resistance level and then roll back down. So overall, it's really difficult, but it is still technically an oversold bounce off of a low. And you guys, I need to see this. This is from a previous low. It's not like this would be much different if this move came off of. Let me get one more line here. If this move came off of a higher low. So if we had higher lows first, say a pivot point right around my cursor, then this would be substantially different. But this came off of an absolute bottom. It doesn't mean it can't hesitate sideways and climb higher from here, but there's just not a lot to support this. It's kind of flighty. It's a little bit loose. There's not much to catch this thing from falling back down. There's my pessimistic side. The optimistic side is it surged out. It surged all the way above the 50-day moving average and didn't look back. The longer we stay above this 50-day moving average, I think the more bullish these markets get. There you go. Joe's 2 cents for today. Let's move on to our next chart. This is the Qs. Very, very similar. You can see the same lines. I'll draw a couple here. This is that resistance level. You can see that we did come from this move lower. You can see some of these lows I can draw. So this channel is still on the low side. We did push above that 50-day. Percentage-wise, it's a little bit more aggressive looking on the Qs, but we could see head fakes because we know this is just a more volatile market regardless. Something to look at, decrease in the volume when we have this big bounce. So technically, folks, if you take everything off the table and quit watching the news and reading articles, that is a decreased volume with a surge to the upside off of a lower low. This is still a bear rally. Now, I don't want to say, hey, that means you just got to go ahead and short it. We got to wait for confirmation before we can do that. But it is something just to be aware of. What's tough about this is it creates a situation to where we really can't do much. We're kind of like a deer in the headlights at this point, especially back up to these resistance levels. So I don't have much to go off of. Let's get to the heat map. And you can see energy had the biggest fall today, continues to fall back, basic materials, utilities, things like that. And we've seen that. And these big tech, communication services, everything else is still kind of green. Not as green as we saw it over the last week or so, right? But it is still on the green side. Keep in mind, we're about 50-50 above that our 50-day moving average. So everything has had a very comfortable, confident surge, whether it was warranted or not. And what do I mean by that? Whether you believe in the move or you got your fundamentals that all line up, or technically it just had a massive bounce above resistance levels, it doesn't matter. It happened. And what's tough about that is that's all we can chalk it up to. That's it. I truly believe it's the frog rabbit. It's the frog rabbit. The people that were super nervous about being bearish and the people that were super itchy that they really wanted to buy this bottom, they all did it at once. And that's what we're left with. That's kind of where I'm going with. Where's my outlook? It's going to be a +1 and a 0. The +1 is because I want to echo what Corey said. I do think that we do have a little bit more to jump around up here. I'm just going to circle this area. And I like this oval because it could be to the top of that oval or to the bottom, but just kind of get that last squeeze out that last bear, and then we roll over. Maybe consolidate. And I'll say it again. If we continue to consolidate this week and into next, then it does warrant outperformance and strength to where it is creating a base to where we could move higher. Why? And that's why I'm the +1 for the week. Now, why am I monthly for the 0? Because I do think we need to consolidate or hesitate before we do that bullish move. I'm staying at 0 because we could easily have that +1 for the week and then fail into next week, and this becomes a catastrophic sell-off into the end of the year. Right? So it could go either way. Thanks for the help, Joe. Tell me something that I don't know. Well, guess what? I don't know either. So I'm thinking right now it could go either way. We'll see. Potential trades-wise, Roblox, Verizon, T-Mobile, I like both those communications. Walmart popped up. That's the one we're going to talk about today. On the neutral side, everything that was coming off the bottom has rolled over, and everything that was at the top is I should say vice versa. So everything's kind of moving out of its range, so the neutral trades are outside of their range, but if you hold true to them, then they might come back if these markets continue to consolidate or if they roll over. A lot of these potential bearish trades and even the bulls up there, folks, I carried over from last week. So yes, it did go out of their pattern, but guess what? They're right back in it. First Solar's one I like again. GLW, and then TDOC was one that Rob talked about on the weekend update. So let's take a look at my first bull here. This is Walmart. I do like it. Just pretty easy, pretty basic. It's an ascending triangle pattern, right? got a nice move up through here. Got a little deep in this area, but that's okay. I'm going to take a look at that. We got good resistance. Sideways to up, play it around the 166, 165 level. I wouldn't target it too aggressive just in case the markets do decide to consolidate or roll over. But it is outperforming. It's in retail, and we've seen the retail numbers being super strong. I'm seeing energy showing that it's expecting weakness and a slowdown in the future. But I see a retail guy out there that really wants to push some buttons and buy some stocks, and looking forward to a Santa Claus rally. Anyways, retail's doing well. This is looking pretty good. Something to think about. Jumping all the way back down to the bears. This is First Solar. This was a bear last week. This was a bear the week before. And guess what? It's a bear now. What I do like about this is the rollover. This resistance area here, this is the support that I want to see it get back below after a little bit of an anemic run. Right below, in between its 20 and 50-day moving average. Looks like it's on its way back down. So, hey, if you're looking for a new position, or if you have an old position, I've been telling a lot of my traders over the last few weeks, it's very difficult to abandon bears or bulls here. But these bounces do hurt, because when they bounce as hard as they do, it takes your bears way out of play. But if it rolls back over just as hard, you could be fine. So just kind of stick to your guns. Keep charting. And that's what's so tough, is I know I want to say that could be the bottom, just the behavior of it. That might be, hey, that was the bottom of all bottoms, or it just might be a very massive bounce that's going to come back down and roll lower. Too strong to short and too extended to buy. It's that little indent bullet point there. And I hate being in the situation, but the best thing you can do is just kind of stay stagnant in your portfolio. Don't rush to do anything too major. Don't go out and try to hedge everything out. I'll just kind of let this thing roll over, because I'm not seeing too much technically change me from a straight bull to a bear or vice versa. This is just a massive move. Still very strong bear rally overall technically. Check if you zoom all the way out, folks, and draw those lines, this is a massive bear rally, and it just seems very aggressive. But let's follow the technicals. Seasonality is on deck, and this really depends on the sentiment. We've heard too many times October, November, the worst 2 months, but December into the end of the year, the Santa Claus rally, that can be believed. And if there's a lot of sentiment out there that believes it, then it will happen. So we can't underestimate the power or the motion of that ocean. Mixed signals are signs of strength and weakness in the economic reports. You could take it as either way. I've been seriously really confused as of late. I don't know which way to go with it. So I'm just following how the sentiment absorbs it. And so far, as of that kind of the Fed's outlook, that PCE number, it's been glass half full. It's super bullish. So the Fed's comfortable to sit and wait and watch. That could have been the catalyst. You heard me tout that. We got some earnings. I think they're bleeding off. I think what we saw last week, we're just going to see how far the bulls go with this, and if bears step in, and how far the buying will go. So sit back, follow them technically, and that's about all we can do. Don't make any drastic changes. And here's the best, folks. If you don't know, and I'm going to echo what Rob said on Friday, if you don't know, you don't have to trade it. We can guess all we want and have fun and say, I told you it would. I told you go up. I told you go down. But you don't have to buy anything or sell anything. If you don't know it, then sit out. There's no benefit to actually try to throw darts or guess here. All right, folks, as always, thanks for joining me. We'll talk to you next time. Bye, everybody.